Hi, today we're here with Cindy Padnos with 15 years of investment experience. Cindy is a pioneer in the venture space. She's a founder and managing partner at Illuminate Ventures, which is a seed stage enterprise B2B software focused venture capital firm with 3 prior funds and 65 million under management. With 40 million invested across 30 companies, the firm has gained 2 IPOs, 7 strategic M&A exits, and more than 4.5 billion of follow-on capital from firms like Insight Partners, Innovation Endeavors, and NEA and Sequoia. So big firms there. She has a particular interest in the intersection of cloud computing with trends that impact the future of work. Her investment exit include acquisitions by Autodesk, Hearst, Cloudera, New Relic, Vista Equity Partners, and Rubicon Technology Partners, as well as successful IPOs with names you probably know, Xactly and Coupang. Cindy's current portfolio includes market leaders like Bright Edge, Content Stack, Orchestro, and Pex. Incredibly, more than 80% of Illuminate's portfolio founding teams are diverse, half including women. She and her partner, Jennifer Savage, are veteran software operators who help accelerate the value in their portfolio companies, which I'm going to ask her about, by leveraging the firm's purpose-built platform of resources. And prior to her investment career, Cindy was a successful B2B software company operator, including as founder and CEO of early SaaS startup Vivint, president, CEO of Acumen, and VP of marketing at Scopus Technology. Cindy's been honored as one of the most influential women in technology by Fast Company and most influential women in Silicon Valley by the New York Times. She gained her BA at the University of Michigan, magna cum laude, and MSIA MBA with honors at Carnegie Mellon's Tepper School, where she serves as vice chair of the Business Board of Advisors. So with all due time here, Cindy, welcome. Thank you so much for joining us today.
Thank you so much for inviting me. It's a pleasure to be here.
It's funny because we met so long ago, and it's been wonderful to watch, your amazing trajectory and the businesses that you've helped support. One of the things that I found quite interesting is, you talk about targeting companies that represent hidden value. We do that in the public markets, but I think it would be really great to describe to folks what that means to you and your team and Illuminate in the private markets.
Thank you. That's such a great question. So from day one of the firm, we always felt that it was important to create a level playing field for all types of founders, not just women and not just based on diversity per se. But by doing that, we suddenly came to realize that there were many entrepreneurs out there that weren't being targeted by other VC firms. And that the ways that venture capital backed startups actually was changing. They didn't any longer need to have $4 million to start a business once AWS arrived on the scene. But beyond that, founders were bootstrapping companies. They were gaining SBIR grants. They were taking technologies they had built inside of IT services businesses, understanding that you got a 1x valuation there, but could get a 10 or 20x valuation in a SaaS company, and spinning those products and technologies out. What was particularly interesting about each of those was that each of those scenarios lessened the actual risk associated with that business. It might be team risk because they had worked together for years. It might be technology risk because they had already built a product inside of an IT company, a services business. But in one way or another, they had in some way reduced risk and yet still were, for all intents and purposes, a seed stage startup.
Mm-hmm. And it seems like also it enabled you to probably look at businesses that were outside the scope of what traditional VCs were looking at, right? It was no longer about your network, putting a lot of money towards, call it someone in their network, and you could find businesses or spin outs to invest in that might not have been kind of the typical one 10 years ago.
That's absolutely true. And it turns out that when you find companies like that, they sometimes have attributes that look a little bit different from the norm as well. And those attributes can have to do with diversity, but they can also have to do with, things like they may have started as an LLC.
Sure.
And most VCs would never invest in one. And we've found ways that we can do that, at least on a temporary basis, to help that entrepreneur make the transition more smoothly. or they may have family members as co-founders. I remember, and by the way, I grew up in a family-owned business, so I know it can succeed. It's been around for over 100 years, and so I know pretty well what to look for and what to avoid. Let's put it that way. So we don't ignore things like that. We vet them, but we look at the opportunity first. How big is the market? How innovative is the product? How differentiated is this? How big can it grow? And is this the right team to go after that opportunity? And then we look at some of these other obstacles as necessary and determine whether they're showstoppers or not versus ruling them out from the get-go.
And that's something interesting, maybe, because for folks who haven't been in an early stage company, people always want to know the TAM or what's really addressable, what can you secure, and then the metrics behind that. But how important is it to be, call it a very large growing opportunity, such that you really want to kind of shoot the lights out versus maybe, still maybe hundreds of millions, but a smaller opportunity, not that massive, $20 billion opportunity, but a smaller one, but has a higher likelihood of the entrepreneur securing it or securing a greater share of it or keeping their moat in that area. How do you think about the size and potential of the market in those lenses?
It's a great question. I would say there are certain minimum thresholds. It's true if you want to be a venture-backed business. There's nothing wrong with, running a company that may never grow to be more than a 10 or 20 or $30 million business, but that's not a venture-backable business. That's reality. So we do look for very large TAMs and SAMs, service addressable markets, but we're more open-minded about where they are in what stage they're at today. We want to know that it can be that in the next 3, 5, 7 years. It doesn't have to be there today. If we had said, I can pick so many companies in our portfolio. BrightEdge is a good example. If we had said we wouldn't invest in a company where the TAM wasn't well over $1 billion, we would have never invested in that company. They were doing search engine optimization before most people knew what it was. They knew they wanted to rank at the top of the page every time you did a Google search. They knew that, but they didn't know what SEO was. They thought it was all about buying keywords. And they didn't understand that you could not just hire consultants to do this other work, which they were doing, but that you could automate it and that you could use AI to make it possible for you to be top ranked across every search engine and every geography without ever putting any human labor into it. So, today that's a $100 million plus run rate company. We invested at 0 revenue and the TAM was much smaller than it is today.
Well, that's a great example there for folks who are wondering where roughly the threshold, but also the same token, where there might be some limits and some, ways to get around that, just thinking through how fast something will get to that level versus just the absolute level that you need to be at. One of the things is, before entering the VC community 15 years ago, obviously it's great when a venture capitalist also was a founder or worked in a VC-backed company, which you did yourself. How does that play a role into your, how you go about it, your process, your frameworks, as well as success as an investor?
I think having been a founder myself, and my partner Jennifer was part of that original team at Vivant, which was a very early SaaS procurement software company. I think that background brings a number of different helpful elements along with it. One is we fundamentally have empathy for entrepreneurs. We've walked in their shoes. We know how hard their job is and that they've basically invested everything into that vision that they have and how important it is to them. So we treat that with respect. That's fundamental. But I also think, having been operators, having been the ones who had to sell those first products of new releases of, to new companies, to new customers, we understand what it takes to get to product market fit. We understand what it takes to scale revenue. We have relationships with customers and business partners that we can help bring to bear. And we have a really broad network that we've built into something we call our Business Advisory Council that helps us do that. One of the things you learn as an entrepreneur is you can't do it all alone. You have to have a very big support network. And the more people you can enlist that are talented, the better you are. The more advocates you have, the better you are.
That's right. And just being known, someone will make that connection to somebody else and say, hey, this team is doing X, Y, Z when they're not even around you, right? Because they're aware of it.
Yeah.
Let's focus a little bit on the B2B software space. So, we keep hearing people don't like as much B2C, they want B2B. So walk us through a little bit about, why B2B, not B2C? How big is that opportunity, which obviously can go across so many different sectors. Even if it's a software space, software can be across so many different sectors. How do you focus your time? Where do you think is one of the most exciting areas right now that you're looking at for those businesses you're hoping to see grow over the next few years?
Well, we're seeing, without a doubt, generational changes happening within the business landscape. I'm not someone here to tell you people shouldn't invest in consumer internet. I think there's opportunity there as well, but I know where the opportunity is in our space. Today, the B2B software category is over an $800 billion market. Parts of it are growing at 40 to 70 to 100% a year. We've all heard recently about Gen AI, and all of the rest that goes along with that. But AI ML has been around for, 20 years. It's been applied and been used in, I would say companies easily for the last 10, because it certainly has been in our portfolio. And I think the same is going to be true about all of these new technologies. They will become fundamental core parts of every product that's delivered over time. They may be really unique and differentiated today, but we look for companies fundamentally where it's the business problem they're solving, the ROI that they're delivering that's meaningful, not just the technology.
Right.
Because technology is not that hard to copy or to replicate, and everyone is going to be building on top of some of these other elements that we have today.
So there's certain, call it subsectors, or certain, I guess, solutions or problems that people are solving that you think are those big problems with big potential market solutions.
I'll give you an example. The first company that we've just signed a term sheet for our new fund is in an area that's called federated learning. People frequently hear that word and they think, oh, is that learning management systems or that sort of thing? No, not at all. It's really about how do you take data that exists in different pools. It might be in different companies. It might be in different geographies. And how do you bring that data together in a way that still respects privacy requirements and other regulatory requirements that are in place? It can't be done today for the most part. And so the first example, this company chose to apply its technology, was working directly with the National Institutes of Health and helping them take data about rare diseases and aggregate it from all over the globe. So if it's a rare disease, that means there's only a very small amount of data in any one geography, and between HIPAA compliance and EU regulatory compliance and California and other privacy laws, there's no way to bring that data together normally. So there are products that enable, and this is an example of one, absolutely new use cases for the vast amount of data that exists in the market today.
And I can see how that would be useful in our industry, because there's different requirements. Obviously, we're in one of the most heavily regulated industries here in investments, and there's different rules on the data you have for European investors versus US investors. So I can imagine that it has such a great applicability across the world, across all industries.
That's right. That's right. So, this is a product that can be used by very large organizations, that also two different commercial organizations that may want to merge their data together, but couldn't otherwise do so in order to have better forecasting, in order to have better awareness of fraud, in order to better identify customers who would be buyers for their products. The use cases for this are really, just innumerable.
Right. And getting to that, how you find these things, because obviously you live and breathe in the B2B software space, and you're thinking about and seeing what's coming down the pike, and you have portfolio companies who are talking to you about it, and you learn about the competitive nature. So obviously, the longer you spend in this industry, the venture capital industry, the better. But maybe walk through for people who don't understand it as much. Do you sit there with a blank piece of paper going after things to source? Is it more network driven? About how do you support, the sourcing initiative before we get to, once you make a portfolio company happen after a term sheet and funding, secured? Let's get to the first part, just the sourcing part.
There are so many deals that come to us directly that you might think that that's the primary source of our actual investments, but it's not. We have found over the years that our best sources, if you will, of high quality deal flow come from a few areas that are all part of this thing that I've talked about, as I've called our platform. One leg of that platform is our Business Advisory Council. We have 45 people who sit today on over 100 public company boards. They've sat on more than 250 private company boards, and they all come from the enterprise tech world in one way or another. They are a phenomenal source of deal flow, but they also help us with diligence. I don't think we've ever invested in a company where we didn't leverage one of these members for diligence. They help with the whole investment life cycle, I would say, because some of them have even taken board seats in our portfolio companies. We also have something we haven't talked about. It's our Class Year internship program. I'm a little reluctant to talk about it because it's kind of a secret weapon.
Okay.
But I will because we love them. We have had more than 100 students graduate through this program since the inception of the firm. Right now, we have 15 active MBA candidates from across the country that are interns working with us throughout the class year. They do that for 2 years. They come in the first year of their program. They help us when they're the second year students, recruit the first year students in. They help us plan and manage to work with them. They're another source because every one of them that graduates becomes a scout for us out in those jobs in the tech world that they take. And then our own portfolio companies, we now have a serial founder, if you will, meaning one of our founders that was in our very first fund and his company was acquired by Cloudera is now a founder in our fund too as well. He went to Cloudera for 3 years, left, started a new co, and we had the privilege to be an investor with him again. And that group of very successful entrepreneurs that we now work with, they're magnets for other entrepreneurs, and they refer deal flow to us as well. So yes, Jennifer and I, like many other VCs, have long careers in tech and have great networks. Jennifer, example, was at DocuSign early, at Smartsheet early, at FlowRoute early, 2 IPOs and another M&A. She was also the VP of products in the company I founded that was acquired by a public company. Those employees across all of those businesses become our networks as well.
Right. And then, so you make the investment, we mentioned a little bit about this broad network that helped you source and also provide, whether it's a sounding board afterwards, but it sounds like it's a lot more than that you support your opportunities heavily. Maybe talk a little bit about what is it you do with them, that either differentiates Illuminate, or I guess helps supercharge what you do, maybe generic to the industry, but something that you do very well.
Thanks. Yeah. So, we see over 1,000 deals a year. We pick 3 to 5 to invest in. So we have this very concentrated, intentionally concentrated portfolio. They are companies that are typically further along. I mentioned that earlier, which means they're ready to start accelerating their business. We're not a company's best investor when they're still building product. We're there to help them go from the stage where they are just getting those first initial customers and really have to figure out if this is the time to start accelerating and helping them piece those things together. So yes, we leverage the advisory council for a variety of things. They can become the first customers and even business partners for our portfolio companies. We've had the head of corporate strategy of IBM on our advisory council. We have people who sit on all these public company boards who can make introductions for us for those companies to become our first customers and or business partners. And, as I mentioned, my partner, Jennifer, was early at DocuSign and Smartsheet, quite, more recently than I have been in an operating role. She joined me 4 years ago, and she can bring to bear that knowledge of really building the steps in a very thoughtful fashion of how you determine product market fit before you spend a vast amount of capital, which happens all the time, by the way, on sales and marketing before the company and the product's really ready.
And, we touched on this a little bit at the beginning, and it's something that we've been both around the block for quite a while. I tend to not like to talk about diversity in interviews, but at the same time, it is so important in the investment industry. And so, in the VC land, how has the diversity of founders changed over time? And, do you actively go out to impact those low numbers that seem to still exist? Or is it something that you just are keeping an open mind and therefore open to opportunities, and therefore your percentage of portfolio companies tend to look a little bit more diverse?
We have, from day one of the firm, had a strategy that said, we're going to create a level playing field. We're going to remove the barriers. And there are a variety of things we've done to help enable that. That Business Advisory Council membership is 2/3 women and 3/4 diverse. The entrepreneurship, student in residence program that we have and intern programs we have, those are extremely diverse. 75% of our students intentionally diverse. We think by creating that environment, and I think you're aware, we've written white papers about diversity in the tech ecosystem for 10 years. We've published a number of those. The case studies that Stanford and others have done about that have been very, very helpful, I think, and helpful to us and hopefully the community. But we never use gender or diversity as an investing criteria. We don't need to. All we have to do is remove the barriers, and we end up seeing so much more broad audience that we can choose from, and we simply choose the best investment opportunities, period.
And we'll get into lessons learned next, because I know it's painful for us, but to say that, something I tell my kids is like, I make a mistake every day, especially in the public markets. It's a little different from ventures. Like, you don't see your mistakes every single day unless you have a portfolio company that's having a lot of trouble. But you know what I mean? But in the venture world, looking back at your career, which has spanned so many interesting accomplishments, it'd be helpful to hear about, like, was there a pattern to the lessons learned, or was there one instance where it's like, okay, that was a big one, but I learned X, Y, Z, which I never repeated again?
There've been so many lessons learned, and particularly having been a founder, there were many lessons along the way. Some of which the reason, for example, we have this Business Advisory Council of the type that it is, meaning it helps both us and our portfolio companies, is that I learned the value of that as a founder, CEO of a venture-backed company, where when we built that group, it wasn't just for me, it was for all of my key executives. Yeah. And I saw, oh my gosh, how much benefit they got from that I couldn't give them. Having someone like Mike Stonebreaker, who was really the founder of SQL, the whole database technology, being an advisor to our VP of engineering, I couldn't do that. Right. Nothing like that. So I would say I'm trying to think about your question of a common theme amongst these things. I think the common thing is to always sit back and listen, to hear what other people have to say, to take that in, and not always believe it or accept all of it, but to listen long enough to hear the ideas that you wouldn't come up with yourself. Mm-hmm. Because we all think we're pretty smart people, right? And I think most of the people, and yourself included, are very smart people. But we're the best people we can ever be. The best capability we can ever represent is when we take the input of other amazing people that we can attract to work with us. And if I've made mistakes along the way, it's sometimes been plunging ahead without taking all of the rest of that input and getting the value out of it. Even if I choose to disregard it,
Right.
having heard it is really important.
That's important because I feel that fine line, right? I think we all do. Whereas even if you are a very open person and you always are accepting of feedback, you have to decide, are you accepting it and doing something about it or not? And so the fact that you heard it is the first important step, right? That they either disagree with something or they would take a different stance or something, right? It's a different path. But then you have to, at the end of the day, you're Caesar, right? Is that Caesar's got to have the thumbs up, we're acting on that, or the thumbs down, you're not going to be acting on that. And that, I think, is that fine line, that difficulty, right? That you have to deal with as you being an investor, in some way partnering with entrepreneurs and riding along with them.
So my laptop is actually named Zarina. So I think of da or niet.
And last but not least, we know that the firm's raising its next flagship fund, Illuminate 3, and an opportunity fund, Spotlight Fund 2, and has already conducted a first close on each. So getting people to find you is very important. So how can people find you, Cindy, to either keep abreast of what you're doing, think about investing with you, or just to get in touch for whatever reason?
Yeah, the easiest way is obviously going to be email, and that's just Cindy, CINDY, at illuminate.com. And illuminate is spelled turn on the lights, illuminate.
I like that. You're able to just give it just like that. Well, thank you so much. It's wonderful to see all your accomplishments. And I know a lot of people are going to be writing down that lesson learned, even though that's like the hardest thing, right? Listening and then deciding. I think that it's sage advice that you're giving out there that you've learned over years. So thank you so much, Cindy.
Nadine, thank you. I mean, you are an incredible advocate of our industry and of women in this industry, and it's very, very much appreciated.
All right, well, we'll get you back on soon. We want to hear how it's all going. We're going to hear about your portfolio companies back in 6 months. So thank you so much.
Take care. Bye-bye.